I'm sitting here at my desk in Omaha, and I got to tell you something that's going to sound alarming. But I've lived through 94 years, seen wars, crashes, and chaos most people only read about in history books. And what I'm watching unfold right now, it's not just another crisis. This is different, very different. World War III isn't coming. It's already here, just not in the way people expect. Most people think World War III means tanks rolling through Europe, nuclear missiles flying overhead. But that's old thinking. The New World War, it's economic, it's technological, it's happening in shipping lanes and semiconductor factories and currency markets. And if you're not paying attention, if you're not positioned correctly, you're going to lose everything you've worked for. Let me paint you a picture of what I'm seeing right now. As we close out 2025 and head into 2026, that Russia just ordered 261,000 young men into military service. That's not a small number. That's the population of a major city being mobilized for war. Ukraine's launching drone strikes on Putin's residence. The Middle East is exploding with Yemen entering a 90-day state of emergency. Saudi forces bombing ports, demanding the UAE pull out mercenaries within 24 hours. And that's just one theater. Turn your attention to Asia. Chinese warships are 10 meters from Taiwanese naval vessels. That's close enough to see the faces of the sailors on the other side. The United States just conducted its first ever drone strike inside Venezuela, and the president openly admitted it. 3 Baltic nations just withdrew from the Ottawa Convention so they can manufacture and deploy landmines again. These aren't peacetime decisions. These are war preparations. Now, I know what some of you are thinking. Warren, we've had tensions before. We've had conflicts before. This will blow over. But here's what's different this time. It's not one conflict. It's 7, 8, maybe 10 conflicts all happening simultaneously, all interconnected, all involving major powers and critical resources. And the global financial system is not built for this. It's built for peace, for stability, for predictable trade routes and currency flows. When I was younger, conflicts were isolated. Korea happened. Vietnam happened. The Gulf War happened. But the rest of the world kept functioning. Supply chains stayed intact. Oil flowed. Money moved. That's not what we're looking at now. We're looking at simultaneous disruptions across energy, shipping, manufacturing, food production, and technology supply chains. And most investors, they're not ready. They're still playing by the old rules. But I've been through this before. Not exactly this, but similar chaos. And I've learned something valuable over 75 years of investing. When the world goes crazy, when conflicts erupt, when chaos spreads, there are specific assets that don't just survive, they thrive. And that's what I want to share with you today. 7 assets that have made me billions during every major conflict, every crisis, every moment of global instability. These aren't theories. These aren't guesses. These are assets I own right now. Assets Berkshire Hathaway is holding as I speak. Assets that have protected and grown wealth through World War II, the Cold War, the Gulf Wars, 9/11, the financial crisis, and now this emerging multi-front conflict we're living through. So let me walk you through them one by one. The first asset, and this is critical, is cash in the right currencies. Now, I've talked about cash before. People always say, Warren, inflation is eating cash alive. Why would you hold cash? But during conflicts, during geopolitical chaos, cash isn't just an asset. It's optionality. It's ammunition. In which currency you hold matters more than ever. Right now, Berkshire is sitting on over $300 billion in cash. People call it a war chest, and they're not wrong. But here's what most people miss. Not all cash is created equal when conflicts erupt. The US dollar, despite everything you read, despite the debt concerns, it's still the reserve currency. When missiles fly, when ports close, when supply chains break, money floods into U.S. treasuries and U.S. dollars. We saw it in 2008. We saw it during COVID. We'll see it again. But I'm also watching the Swiss franc. Switzerland didn't get involved in World War II, didn't get involved in any war really. The Swiss franc is neutrality in currency form. And during conflicts, neutrality has value. I'm not saying put all your money in Swiss francs, but having some exposure, that's smart diversification when the world is fracturing into opposing camps. The second asset, and this one's going to upset some people, is defense and aerospace companies. Now, I don't love war. Nobody should. War is terrible. It destroys lives, families, futures. But I'm an investor, and investors have to deal with reality, not how we wish things were. And the reality is this: global defense spending is about to explode. Look at what's happening. Russia mobilizing hundreds of thousands of troops. Baltic nations restarting landmine production. Taiwan increasing defense spending by double digits. The Middle East in chaos. Every nation is rearming. Every government is prioritizing military readiness. And that means one thing for investors. Defense contractors are going to print money. Companies like Lockheed Martin, Raytheon, Northrop Grumman, these aren't speculative plays. These are companies with multi-year backlogs, government contracts that are essentially guaranteed revenue, and products that every nation suddenly needs more of. Missiles, drones, radar systems, aircraft, ships. The demand is there, the contracts are there, and the profits will follow. I'm not saying this because I'm happy about it. I'm saying it because it's true. And in investing, you profit from truth, not from wishful thinking. The third asset is energy, but not the energy most people think. Everyone focuses on oil. Oil prices go up during conflicts. That's conventional wisdom, and it's partly true. But what I'm more interested in is energy independence infrastructure. Natural gas pipelines, LNG terminals, strategic petroleum reserves, renewable energy that doesn't depend on Middle Eastern stability. Here's why this matters. The conflicts we're seeing, they're centered around energy choke points. The Strait of Hormuz, the South China Sea, shipping lanes through the Red Sea. If any of these get disrupted, and they will, nations that have energy independence will have enormous advantages. And companies that provide that independence, they're going to be invaluable. I'm looking at companies with U.S.-based natural gas production, companies building LNG export facilities, companies with strategic positions in stable regions. Because when the chaos intensifies, and it will, energy security becomes national security. And investors who position themselves in energy security, they're going to do very well. The fourth asset is essential commodities, specifically food and agricultural products. Most people don't think about this during geopolitical conflicts, but they should. War disrupts food supply chains faster than almost anything else. Ukraine is one of the world's largest wheat exporters that's threatened. Fertilizer production, much of it comes from Russia and Belarus. That's disrupted. Shipping routes for grain, those are under threat. What does this mean? Food prices are going to rise. And companies that control farmland, grain storage, fertilizer production, agricultural technology, they're going to see their values increase dramatically. I own farmland. Not a lot, but some. And that farmland produces food regardless of what's happening in currency markets or stock exchanges. People need to eat. Always that in every conflict, in every crisis, food demand remains constant. So I'm looking at agricultural commodity companies, farmland REITs, companies that produce fertilizers and seeds. These aren't exciting investments, but during conflicts, boring and essential beats exciting and discretionary every single time. The fifth asset, and this one requires careful selection, is precious metals. Now, I've been skeptical of gold in the past. I've said it doesn't produce anything, doesn't pay dividends, just sits there, and that's still true. But during conflicts, especially conflicts that threaten currency stability and banking systems, gold serves a purpose. It's the ultimate safe haven when everything else is uncertain. What I'm seeing now is central banks, particularly in nations trying to reduce dependence on the dollar, buying gold at record rates. China, Russia, India, Middle Eastern nations, they're all accumulating gold. Not because they love gold, but because they don't trust the current system. And when central banks are buying, when geopolitical tensions are this high, having some gold exposure makes sense. I'm not talking about half your portfolio, maybe 5, maybe 10%, but having some exposure to physical gold or gold mining companies with low costs and high reserves, that's prudent risk management in this environment. The sixth asset is technology infrastructure, specifically in semiconductors and critical minerals. Here's what most people don't understand. The conflicts we're seeing, they're not just about territory or ideology. They're about control of the technologies that will define the next century. Semiconductors, rare earth minerals, artificial intelligence infrastructure. China is now the fourth largest manufacturing superpower. They're not just making cheap goods anymore. They're manufacturing advanced technology, and they're securing supply chains for the critical minerals needed for batteries, semiconductors, advanced electronics. The tension between China and Taiwan isn't just political. Taiwan produces over 60% of the world's advanced semiconductors. If that supply gets disrupted, the global economy stops. So I'm looking at companies that are diversifying semiconductor production away from vulnerable regions. Companies building fabs in the United States, in Europe, in stable locations. Companies that control lithium deposits, rare earth minerals, the raw materials for the technology economy. These assets, they're going to be fought over, protected, and extremely valuable. The seventh and final asset is water infrastructure and utilities. This one surprises people, but it shouldn't. Conflicts disrupt basic services. Power grids get targeted. Water treatment facilities become strategic assets. And companies that provide essential utilities, particularly water, they become incredibly valuable. Water is even more essential than energy. You can live without electricity. You cannot live without clean water. And as conflicts intensify, as climate change adds additional stress, water scarcity becomes a critical issue. Companies that purify water, transport water, manage water infrastructure, these are long-term holds that will only become more valuable. I'm looking at water utilities in stable regions, companies with desalination technology, agricultural water management companies. These aren't going to double overnight, but over the next decade, as water becomes the most critical resource on the planet, these investments will pay off tremendously. Now, let me pull this all together for you. These 7 assets, cash and strong currencies, defense contractors, energy independence infrastructure, agricultural commodities, precious metals, technology supply chain companies, and water utilities. They work together. They protect each other. They create a fortress around your wealth. When one goes down, another goes up. When conflicts intensify, they all become more valuable. This isn't about being pessimistic. This isn't about hoping for war or chaos. This is about being realistic, looking at what's actually happening in the world, not what we wish was happening, and positioning yourself accordingly. I've lived through enough history to know this. The investors who survive and thrive during chaotic times aren't the ones with their heads in the sand. They're not the ones hoping things will get better. They're the ones who look at reality clearly, who position themselves correctly, and who have the courage to act when others are paralyzed by fear. So here's what I'm asking you to do. Look at your portfolio right now. Really look at it. How much of it is exposed to the chaos I just described? How much of it would survive if shipping lanes close, if conflicts escalate, if the assumptions of the last 30 years of globalization and peace suddenly don't apply anymore? If you're heavily concentrated in technology stocks that depend on Taiwan, if you're holding companies that rely on stable international trade, if you're in assets that assume peace and stability, you need to rebalance. You need to add these 7 asset types. Not all at once, not in equal amounts, but strategically, thoughtfully with a plan. Because 2026 is going to be different from 2025. The conflicts we're seeing, they're not de-escalating. They're intensifying. More nations are getting involved. More supply chains are being disrupted. More certainties are becoming uncertainties. And investors who see this clearly, who position themselves now, they're going to preserve and grow their wealth while others watch theirs evaporate. I'm not trying to scare you. I'm trying to wake you up. The old playbook, the one that worked for the last few decades, it's not going to work in this new environment. You need a conflict-proof portfolio. You need assets that thrive when the world is chaotic, not assets that only work when everything is calm. These 7 assets have made me billions over my lifetime. Not because I'm smarter than everyone else, but because I'm willing to look at uncomfortable truths and act on them. And the uncomfortable truth right now is this. We're living through the early stages of a multi-front global conflict. It's economic, it's military, it's technological, and it's going to reshape the world. You can either position yourself to survive and thrive in that new world, or you can hope it goes back to the way things were. I know which choice I'm making. I hope you'll make the same one.